Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 16th of September, 2025. Apologies for the delay this morning. I was just digging into some of the details on this policy announcement on uranium. Stocks hit fresh records as there was a major nuclear deal announced by the Department of Energy, driving uranium ETFs to record highs. Tesla and Nvidia also rallied. Tesla was down early on the back of Nvidia was down early on the back of some announcements out of China and clawed back all the losses, and Tesla was up on the fact that Mr. Musk bought about a lazy $1.2 billion worth of shares. So Aussie market did recover during the course of the day. As I sort of said on yesterday's morning call, we expected the weakness early and it'd probably be a buying opportunity, which it was. I think there was a there was a bank holiday in Japan yesterday, which is why it was shut there. No change. Hang Seng was up slightly, as was China, but Eurostox would have caught the tail end of some of the positivity from the US session. The Dow was only up marginally. The S&P just would have been dragged up by the Nasdaq constituents. Russell up small there. As you can see, there's almost not a strong buy in the house overall. We're up about probably, I think, 6% for the month already, in which is usually flagged as a seasonally weak month, September. There's been a lot of broad positivity brought on by Oracle, particularly in the tech and AI sector, which obviously is where a lot of the concentration is in many of the indexes. Some stats out there at the moment. We've got, because of the concentration of that Mag 7 and their incredible stats and margins and sales, etc. We are trading well beyond a record in price to sales ratio in the S&P and a bunch of other metrics. But I did a little bit of deep dive yesterday. If you actually just go equal weighted and take out those basically those Mag 7 stocks or those hyperscalers, which are benefiting from an industrial revolution style, leap in technology with AI. We're not that overvalued. We're still above the historical average, but I think 1.6 price to sales is the average. I think we're around about 2. Whereas if you add the Mag 7 in, we are talking 3.5. So if there's going to be a pullback, it's going to be in these guys. Overall, the very big squares, and at the moment, I really can't see it happening. If anyone's read any of my stuff before, I'm always a little bit on the cautious side because particularly the US markets get very carried away. And I thought September would be, just due to the economy, would be, and those weakening labour market numbers, etc., and the fact that we've still got inflation, which basically means we've got stagflation, which is a disaster for, equity markets globally. This part of the market just keeps doing the heavy lifting, and it just very much feels a little bit unstoppable at the moment. But that really is probably a bit of a hallmark of tops and bottoms in markets. Is when it looks its most grim, it's usually a buy, and when it looks like it's unstoppable, it's probably a sell. But and the fact that someone who is usually as cautious as I is saying that it looks unstoppable might be a good reverse indicator for you all. As you can see here, healthcare was down a little, consumer durables, so the defensive sectors all just smacked up essentially, and all the money just flowing back into this chip sector, into Google, etc. So Tesla's now rallied about 85% out of its lows in April. And I do, and then that, haters going to hate, and basically Elon's, $1.2 billion purchase, but was met with downgrades to the stock. So he bought 2.5 million shares, and look, I firmly agree with him. I did a bit of a deep dive on robotics and automation yesterday, in preparation for some for some stock picks and some investment strategy. And Tesla realistically is like, if you're looking at the total addressable market of just self-driving cars alone, which no one's going to catch up to him on. If anyone's seen the social media posts for those Waygos, um, like, they're hopeless, basically, particularly compared to the Tesla, and how quickly the fully self-driving cars are getting rolled out across the US, and how quickly they're gaining approvals. Whoever's downgrading this stock at the moment has got rocks in their head, because we're talking $1 to $2 trillion total addressable market, probably $1 trillion potentially in the next 2 years. So, and it is Tesla first and daylight second. So I think they've got roughly about a 600% lead on the amount of self-driving hours that they can use for their data. And he has rolled out Grok across all of the ecosystems as well, and not to mention, humanoid robots, etc. So I dare say that would be, an analyst that's still comparing Tesla to BYD, and not looking forward. But yeah, so it was a pretty good performance overnight. And look, that uranium sector particularly, uranium ETF jumped like 9%, or thereabouts, and it was a significant move, busted through record highs, and that record high is from a long, long time ago, but pre-Fukushima disaster. And they announced plans to expand the strategic stockpile and invest 2.7 in domestic uranium. US and UK are also signing a major nuclear deal. They're going to have to advance small modular reactors, accelerate clean energy. One of our favourite picks in that space, Oklo, was up 15% last night at fresh record highs. We've got that in our hyperscaling AI strategy, which is even, I've got to say, it was a 2-year leveraged structured investment, which 2 weeks in is doing about as well as I thought it would do in the first year, let alone the first 2 weeks. We got a little bit lucky, but, got to take luck in markets. So this agreement with the US and the UK is going to speed up regulatory approvals, unlock private funding, strengthen nuclear's role. And as you can see here, here's some of the infographics from, I did a webinar, Hyperscaling AI, which was on the back of that highly popular investment. This power, and obviously data centers are now outpacing office construction. AI data center market size. Oracle's proven that point now as well. So the power is just the need for power. And as Jensen said as well from Nvidia, the only restriction for AI's advancement is basically power, getting enough juice. So I think this will be, particularly for the Australian market, which Australians are so backward with their view about nuclear. We have some of the biggest nuclear uranium deposits in the world. BHP sits on the largest discovered uranium at Olympic Dam, and but look, this is, and I've thought this for many years, for 5 odd years, is the only conceivable way forward to meet emissions targets, and also, this was before AI. Now it's absolutely the only choice, without us, having to push those emissions targets back probably multi-decades. So it's a matter of the market waking up to it here in Australia. Now that there's a lot of haters, and Boss Energy is being described as basically unholdable, and the investors and analysts just always seem to find a way to have a problem with it. But the bottom line is, people, the analysts, apart from generally not being, being very guilty of not scraping the surface of most investment theses these days. They tend to follow the price movements, and the uranium stocks in Australia have been targeted by shorts really heavily. And the price goes down. The analysts in Australia just match their investment thesis to the price movement. It's just a tip for any analysts out there that might be watching. It's supposed to be the other way around, guys. Maybe do a bit of reading. So uranium ETFs up 338% in 5 years. Boss and Paladin probably holding this thing back. They're in it. That's the URA ETF. URNM is a carbon copy. It just holds, essentially just holds units in this. And look at this move here. And it's massive. And that's, like I said, out to record highs. I've been an active player, more so in this period here, which was 2021, different times. We were almost day trading it for many clients. But I don't expect this to start pulling back anytime soon. We've got Cameco in one of our powering AI strategies from a year ago in structured investments. It's up 93% so far in the last 12 months, and we've still got a year to run on that structured investment. So need BHP to start playing a little bit of catch up. So if the ASX could potentially start to catch on to the fact that the rest of the world's buying copper and buying uranium, maybe our materials sector and our energy sector might do a little bit better. But yeah, we're c'est la vie, I suppose. That's why we started global recommendations here this year, and that's why increasingly our ASX portfolios are dwindling. Is because you're getting this move here and a move from earlier in the year from $20 to $46, and I think Paladin Boss is down probably 40%, and Paladin's barely up. So nowhere near record highs. Their forward PEs are in the between 15 and 20. They did have some pretty shocking results, but this is a forward-looking thematic trade. So the analysts in Australia just need to get their head out of the sand a little bit and just look what the forward demand's going to be, because Paladin, with that recent acquisition, I don't know, what was it, 6 months ago, is going to be the third biggest producer in the world. And if BHP, and they did mention uranium for the first time in the last earnings, if BHP starts to produce, like that's just another string to their bow, basically. So this thematic's not. I mean, we saw Oracle basically looking to double their data centers. It's got to get wired. It's got to get powered. Grids can barely handle heat waves, let alone adding another city, essentially. Every month or so onto the grid. So we're going to need these things. As I said, Oklo was our pick in the US. It's one of the Department of Energy's picks for commercial small modular reactors. Obviously, small modular reactors do exist in the military. So yeah, I do believe Wire or COPEX, which COPEX is the US version. Wire in Australia holds COPEX as proxy units in the trust over there. Went to 52-week or record highs as well, which is the copper miners. So yeah, you would expect that you would expect the market with the most amount of mining stocks in it to maybe just wake up to itself at some stage in the ASX and start shifting out of CBA at double record valuations and into something that might actually make some decent money over the next few years. So RBA Assistant Governor speaking this evening, retail sales in the States. I mean, normally that would move markets, but we've got a bunch of Fed meetings. As I said on one of the maybe a couple of last week's morning pods, the debate's sort of like, will they go 50? Will they go 25? They've managed to get Trump's man inducted into the Fed in the nick of time. So he will have an inside man yet again. Further political pressure. As I said, I think we'll probably, even though I think it's a mistake, and I think the Fed thinks it's a mistake because of inflation, I think that 15% chance or 10 to 15% chance of going 50 is a fair bit higher. So, and maybe met with some negativity potentially overall, but again, the AI thematic is just seemingly like the Terminator, which I guess excuse the pun there. We're looking forward to these meetings, central bank meetings here, and I don't really see much. I mean, there's nothing much in the on the earnings front. CSL did announce something this morning as well. I think they're going to spend some. It was in the vicinity of 760 million on Dutch biotech VarmX. Now, if I'm just going to have a very quick look here. It's their first major investment. I don't necessarily know what VarmX does. I haven't really caught, I haven't really read too much about them. But yeah, I'm just reading here from the AFR, makes vaccines and therapies derived from blood plasma. So seems to be a very, fairly sensible, but it will depend on valuation, of course. But we'll see if the haters start up on CSL today, because the very dour ASX seems to not be able to catch the bullish bug. Gold, fresh record overnight. Silver, fresh 14, 15-year high. Copper was up. Platinum was up. Crude and iron ore were up. Should be a really good day, I would say, for the Australian market, because you're going to have the gold sector up. You're going to have the materials sector generally up. Even coal made a small recovery. Lithium was up yesterday as well. And obviously, uranium, URA up 9.32. Personally, I think Paladin and Boss are cheap for, probably about 50-odd%. But whilst they'll probably open quite high. So check that out today. We are pretty, a lot going on, to be honest, considering I thought we'd just be largely in a holding pattern today, and particularly good effects for the Australian market. For those of you who want more detail on that Department of Energy announcement overnight and the implications, check out our socials. I wrote an article this morning, a very quick blog piece this morning on uranium in the Australian market. But thanks for listening and have a good day out there. We'll speak again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.